E-commerce, which refers to the buying and selling of goods and services over the Internet, has become a significant part of modern retail. The issue of online sales tax has become a subject of debate and regulation in many countries around the world. Online sales tax, also known as e-commerce sales tax or Internet sales tax, is a tax levied on sales made through online marketplaces or e-commerce platforms. The key issues and debates surrounding online sales tax include: 1. Nexus and tax jurisdiction. One of the challenges of online sales tax is determining the appropriate tax jurisdiction for e-commerce transactions. In traditional brick-and-mortar retail, sales tax is typically levied based on the location of the physical store. However, in e-commerce, the concept of nexus, or the sufficient connection between a seller and a taxing jurisdiction, becomes more complex due to the borderless nature of the Internet. Determining which jurisdiction has the authority to levy sales tax on online transactions can be challenging, especially when transactions cross state or national borders. 2. Tax collection and compliance. Online sales tax collection and compliance can be complex, as e-commerce sellers may have to deal with multiple tax rates, rules, and regulations in different jurisdictions. This can impose administrative burdens on small and medium-sized e-commerce businesses, which may lack the resources to navigate the complex landscape of online sales tax compliance. Some argue that online sales tax may disproportionately affect small e-commerce businesses, potentially hindering their growth and competitiveness. 3. Fairness and level playing field. One argument in favor of online sales tax is that it levels the playing field between brick-and-mortar retailers and online sellers. Brick-and-mortar retailers are typically subject to sales tax in their physical locations, while online sellers may not have to collect sales tax on their transactions, depending on the jurisdiction. This has led to concerns about unfair competition and a potential disadvantage for traditional retailers, who argue that online sellers should be subject to the same tax obligations. 4. Economic impact and revenue generation. Online sales tax can generate revenue for governments, which can be used to fund public services and infrastructure. Some argue that online sales tax is an important source of revenue for governments, particularly at the state or local level, and can help bridge budget gaps or fund important initiatives. However, others argue that online sales tax may have unintended economic consequences, such as reducing consumer spending, impacting e-commerce growth, or affecting cross-border trade. 5. International implications. Online sales tax can have international implications, particularly for cross-border e-commerce transactions. Determining the appropriate tax treatment for international e-commerce transactions can be complex, involving issues such as customs duties, value-added tax, VAT, and other international trade regulations. International coordination and cooperation may be necessary to address the challenges of online sales tax in a globalized digital economy. It's important to note that online sales tax regulations vary by country, state, and locality, and it's essential to consult relevant tax laws and regulations in the specific jurisdiction where you operate or conduct e-commerce transactions. It is advisable for e-commerce businesses to seek professional tax advice and ensure compliance with applicable laws and regulations related to online sales tax. This is all for the video. This video is made possible by Pictory. If you like to use Pictory to create your videos, enter the promo code J56 at checkout to get 20% off your subscription until you cancel. If you like this video, please like and subscribe.